Hey, tax pros. Today we're going to be talking about ERC credits and how they affect our tax returns. ERC, as we know, is employee retention credit, and these were filed against payroll taxes that were paid during 2020 or 2021 during the pandemic, and it was incentives to keep businesses keep their employees on payroll. So they're effective credit for the economy, but now we have to deal with them. And here's what we have. So diving right in, a lot of times, unless we're super in tune with our client all the way through the year, a lot of times we don't realize this has happened until we see it on our trial balance. So we're gonna, for our example today, we're gonna do a 2022 return. This is a sample trial balance for a restaurant. And here we have our wages that were paid for the restaurant. And then our client had recorded this other income here. It happened to be $3,000. So this is income to the good, cash deposit in the bank account. Now, what we have to do is kind of unpack this. Like, we have to figure out what happened prior. It's good to know what year that the credit was actually applied for. We know it wasn't 2022. So it's either going to be 2020 or 2021. For our example here, we're going to assume it was 2020. And so we'll back up one trial balance, 1 year in trial balance. And here is our wages. And I put together a tax reconciliation here, if you will. So here's this column is for our book. This is our federal journal entry, and this is for our tax. Now, before we get too far down the road with that, there's a couple ways this can actually be accounted for. We can do, if you have an accrual-based taxpayer, the credit may have been just reduced for the wages here and maybe recorded as another asset. And then later in 2022, when that credit actually came in, the other asset was just reduced and it hit cash. So it never actually hit the balance sheet, or the income statement rather. That's all fine and dandy if we can, if we actually have control over our client's books, but a lot of times we don't. And that also doesn't work if you're a cash basis taxpayer as well. So this is a lot of times what we see. The method I'm going to show you here is a good way to work around that. So in the year that the credit was claimed, again, we have to reduce the wages. So here the wages were $16,000 in our example, and the credit that we're claiming against the payroll taxes was $3,000. So we're going to reduce our wages $3,000, so it brings our wages down to $13,000. Now the offset to this is going to be an M adjustment, and I put together another M adjustment here, basically. So when we're going to have a debit to the M adjustment and then a credit to the wages. So this effectively is going to increase our income from $1,800 book income to $4,800 taxable income. All right, so that is how we deal with the year that the credit was claimed. Then we go to 2022. This is the year that the refund is received. And what that looks like is similar, but different. And here, again, we have this income show up in here where nice thing about the credits is the credit is not taxable. So we do get to get a tax deduction for this credit, and that goes down to zero. And then the offsetting of that is also an M adjustment. And since this is other tax exempt income, this actually reduces our taxable income. So we go 26.4 down to 23.4. And this is what the journal entry looks like. So we have a credit to other income that reduces our income here, and then that's a debit to other income, and then a credit to the M1. So let's take a look and see what this looks like on our tax returns. So we've got, let's start out with the 2021 tax return. Remember, we had $16,000 of wages for book purposes. And here we have reduced our wages down to the $13,000 there. And we're also doing an M adjustment on this to do this. So that's going to, if we go to, I'm sorry, I should tell you here, I'm doing a 1065 as well. So be very similar if it was an 1120S. And then, so we're going to go to our Schedule K on page 4, and down, and this is going to be treated as a non-deductible expense. That's because that's a permanent M adjustment. And then we come down here to our M1. Here we have our book income. We're going to disallow this deduction, so effectively add that back to income, and we're going to go up to $4,800 of taxable income. So you see that's adding up. And then as far as the capital is concerned, and this would be just the same if it was on a shareholder basis. We take our taxable income, and since even though we didn't get the benefit of the deduction, the cash still left our bank account. So it actually does reduce tax capital or basis if you were an S Corp. So we're showing that reduction there. Then, so that'll be for the year that we amend for 2021. And then in 2022, the year that the credit comes in, let's actually flip back to the trial balance here. So nothing, we don't do anything with the wages here. Normally we would see, if this was just regular other income, we would see an amount here in line 7. However, we're treating this as tax exempt, so we actually don't have anything showing up here in line 7. Where it does show up is also on Schedule K. I'll go to page 4, and this is down here in this section for other tax exempt income. So this is going to be an M adjustment as well, and a permanent, and that is where we report that. And then if we go down to the M1, here we have our current year book income, and then this is where we reduce the income for that that credit that we actually received this year. So it goes from 26.4 down to 23.4, and then down in the capital, even though the credit wasn't taxed in this year, we still have cash that came into the bank account. So this increases our capital, and that's why we're adding that back here. And that would also increase the basis if you had a shareholder. So that is the gist of what we need to do for these tax returns for the ERC credits. It's a little bit to get your head wrapped around, but once you understand what's going on, it's actually quite simple. And you just got to see the bigger picture of where all the pieces are moving there. So hope this helps, and we'll see you on the next video. Thanks.